please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Trading Hour on CNBC TV18. I'm Ekta Batra. With me is Prashant Nair, and it's turning out to be another weak session for us. Yes, not as volatile, not as dramatic probably as Friday's trading session, but nonetheless, the Nifty is down around 53 odd points. We have the Sensex, which is weak, so that is down around 157 points as we speak, and we have the Bank Nifty, which is down 300 points. And the mid-cap index, which is down 1.5% as well. It's the same kind of issues which are plaguing us today as well. So all what's happening in terms of fears of a liquidity crunch in the debt markets. So that's really weighing on NBFCs, crude prices, and the rupee also really weighing on sentiment at this point in time. A lot of stocks to discuss. So for example, Indiabulls Housing Finance, that stock down 6%. Bajaj Finance down around 4.7%. HDFC down 4% as well at this point in time. And separately, a couple of other stocks which stand out, something like a Yes Bank at this point in time. Hi, Prashant.
Ekta, hi, morning. By the way, we were just joking that if you missed Friday, you missed something. It was nothing like we've seen in a long time. I don't remember seeing a session like that. I mean, just to give you an idea, Ekta, there were at least 50 stocks, on the NSE, which from their respective lows bounced more than 15% by close. So, 50 names bouncing more than 15% from day lows, going all over the place. I mean, it's been called freaky, crazy, blood in the streets, all kinds of things. And I think all those descriptions fit very well.
Fear.
Fear. I mean, absolutely. Fear. I mean, people were scared. I mean, I spoke to many hardened old-timers who volunteered to say that they were scared. I mean, I didn't have to prod it out of them. So it kind of, and I think, and let's just put those points up, the regulator and the government recognized that. So we saw some unprecedented moves. On a Sunday, we had RBI and SEBI, both of them, who came out with a joint, basically put out a joint statement. And then this morning before market, the crucial thing is this all, of course, was aimed at calming and soothing nerves before markets opened this morning. And the finance minister tweeted saying that, broad kind of a statement saying that we are here, we're watching, and we'll step in if necessary. So I think that's point number one. We spoke with State Bank of India. The reason it's important is because it's essentially the largest bank in the system. They essentially said that there is no concern on liquidity as far as NBFCs are concerned. They're not stopping lending to NBFCs, is what the SBI management told us. That should help. Maybe that is helping a little bit of the margin. RBI has called a meeting of IL&FS shareholders on the 28th. I mean, that is the root of the problem here. The IL&FS defaults, rating change, etc. And one thing is pretty clear, IL&FS needs help. Who will step in to help? There were reports that one particular, I think Oryx is interested in buying, a stake and infusing cash, etc. We don't know if that will happen. So under the aegis of the RBI, the shareholders will meet and try to thrash out a situation. But I think that is the problem which needs to be sorted. And, the stock market always looks at authorities. And authorities are essentially the government in this case, maybe the RBI, but the government mainly, to come out and kind of sort of say that we're going to stand behind this thing and we're not going to let this fail. So will the government actually say it? The finance minister tweet did not mention the entity in question, but it was a broad kind of a statement. But the market clearly wants a solid, clear a statement saying that, we will step in. And stepping in is needed because IL&FS needs help. So that's where we stand at this point in time. Volatile session. Keep an eye on the indices. Keep an eye on the markets. Around 11:30 or so is when we have those margin calls, etc. So maybe we'll see some additional volatility around this time. Maybe between 11 and 12 or so, but we're down 65 points already.
Now I think it's extending a bit in terms of losses for the mid-cap index. In fact, just in the past couple of minutes, I think we've reached the low point of the day, and similar with the Bank Nifty.
Oh yeah, so 11,080 is where we are at this point in time. Sudarshan Sukhani is with us from s2analytics.com. Sudarshan, thanks very much. Morning. What do you make of this market now? 1180, as I said. What would you do?
Yeah, good morning. Well, since the start of September, I have been telling that this is a correction and we are looking at lower levels. Now, naturally, Prashant, even I did not expect that Friday would suddenly see those low levels. That is unusual. I mean, that is unpredictable. But the view was, and the view continues to be, that this correction is not over and done with. We should see lower levels still in the Nifty. There will be a lot of volatility intraday as well as for a couple of days up and down. The trade is to buy Nifty put options for October and be prepared for the volatility. You can see 200 points up and 200 points down in the Nifty. But lower levels should eventually come about. As they have come about in September, that should happen in October also. So that's the view for the Nifty. This is no big deal. It's a correction in an ongoing bull market. Markets always correct. But of course, it creates a sense of uneasiness. We have to accept it.
And stocks?
Stocks, but before I quickly go to stocks, I have been talking about pharma and how pharma is going to outperform and which is happening. These mild corrections are opportunities, Ekta, to buy into pharma. Don't miss it out. And now for the stocks, all right. Tata Motors is a short sell. Tata Motors has been a short sell for a long period of time. I think it's going below 200 eventually. But for today, it's a good short to go into. The second short sell is from the NBFC pack, Shriram Transport Finance. 10 days ago, I had told on your shows and in the earlier morning show that NBFCs will follow the PSU banks on the downside. And there's more downside here in this entire sector. Don't buy it, just look at opportunities to sell it. So Tata Motors and Shriram Transport Finance, one buying opportunity, which is HCL Tech, Pharma, IT and independently Reliance are the three areas which we want to buy. So HCL Tech is a buy.
Just before we let you go, I'm not sure if you touched upon this, Sudarshan, but I'm sure a lot of people would be looking at, the fall that we've seen in Bajaj Finance as well as the likes of HDFC quite lucratively. What is your sense? I mean, would you advise buying into such a fall in some of these blue chip names which have otherwise outperformed?
See, it's safe to buy into the HDFC twins. We keep them very separate because it's not just finance there. The quality of the management and of the business itself also is commendable. So HDFC is an investment buying opportunity, both of them. HDFC Bank more so. But I would avoid Bajaj Finance in spite of its excellent pedigree. NBFCs are not going to have it easy.
Sudarshan, thanks very much. Appreciate you joining in, and we'll sort of touch base again soon. We have Rahul Shah from Equity Advisory at Motilal Oswal also joining in. Rahul, morning. As far as single stock futures or the options go, what would you trade? What would you do?
Yeah, hi, morning. The markets are very volatile. So I think I'll have two buys and one short sell idea. So I think buy idea is from, we've been seeing OMC has been hammered for quite some time, and I think some kind of interest being getting built up at the lower levels here around 250 or 250 lines in case of HPCL. So I think one should go long on HPCL. Today's trade, we see some lot of OMC's interest coming back to something. So I would buy HPCL with a stop loss of 252 and target of 270. Second buy idea is JSW Steel. Stock is at still at near to its 52-week high and a good opportunity again to buy on JSW. And the volatility also, we saw stock hitting 390 and bouncing back quite sharply on Friday itself. So I would go long on JSW Steel with a stop loss of 406 and target of 430. And one short idea from NBFC space, India Bulls Housing Finance. We saw a lot of volatility on Friday, and today also it's showing a lot of nervousness. So I think I would go short on India Bulls with a stop loss of 1025 and target of 935.
Okay. All right, Rahul, we're going to let you go on that note. So a short call coming on India Bulls Housing Finance from Rahul Shah. But let's in fact continue with this big story. It remains to be the IL&FS fallout. The Reserve Bank of India and SEBI in fact have issued a statement last evening saying they are ready to act when required. Also, the Reserve Bank of India has called upon the IL&FS shareholders for a meeting on the 28th of September. We spoke to the SEBI chairman and a host of we spoke to the SBI chairman and a
Although we'd like to speak with the SEBI chairman. Not yet.
It's all those flu medicines. But nonetheless, and a whole host of debt fund managers as well as the management of Diwan Housing on what they've made of the panic created in the market. Let's listen in to what they had to say.
We keep on watching the developments, but as of now, the NBFCs with which bank has relationship and if there is any requirement or if they approach, then whatever we do in the normal course of our credit due diligence, and based on that, there is no problem. In fact, in yesterday's release, I have also mentioned about SBI's willingness to partner with NBFCs for co-lending model. This we have been planning for about a year now. And the concerns on NBFC because of ILFS, I think there is a extreme reaction which is totally unwarranted.
The big theme was a downgrade by a AAA rated company. So we have enough NPAs in the system, right? And some things are getting resolved, and if you will take some time. But the big theme was a AAA entity going to default. NBFC is a tricky thing. In NBFC, people typically feel NBFC is very high risk. So I've been hearing this from the last 25 years. But believe me, a well-managed NBFC, according to me, is better than a well-managed, on the risk side, it's better than a well-managed manufacturing company.
Right now, mutual funds have enough liquidity. And on Friday, we have paid redemptions. Today also, all redemptions are going through. But it is extremely important that we take precautionary measures. Due to advance tax outflow, system has got deficiency of about 1,30,000 crore. And there is also reports about Campa funds which are lying today with banks, which will have to be transferred to government, both central and state.
We have not just not defaulted, but there is not even a single day's delay, and this has been a long-standing, unblemished history for the past 34 years. In fact, on the day of the mayhem as well, just to put on record, it was business as usual for us. We made a payment of almost 700 odd crores, for CP as well as some of the other bank obligations. And as we speak today, there is a 900 crore payment going today as well, to the CP holders. We've actually put out, on the exchanges our liquidity position as well for the next 6 months. That even without any capital market exposure, we'll be comfortable in not just repaying all the contractual obligations that we have, but also ensure that our growth trajectory also is decently maintained. It's about 12,000 odd crores of undrawn credit lines which are already approved from the banks.
Well, extended losses for the mid-cap index, so do watch out for that. It's down around 2% as we speak. We have an extremely dismal advance decline ratio on our hands, so it's currently standing at around 1:3. So do just watch out for what exactly is going to happen there. It seems as though those kind of concerns are seeping back into the mid-cap index, similar to what we saw on Friday's trading session. But we do have Manisha joining in to take us through all of the cues in the commodity and the currency space. Manisha, over to you.
Thank you so much for that, Ekta. While, of course, there's so much to discuss in the domestic markets, but the international markets are throwing up a lot of cues as well, especially as the new US-China tariffs take effect today. We were just reading those flashes on how the US tariffs on 200 billion worth of Chinese goods is in effect from now. And China has said that it will retaliate with nearly $60 billion worth of US products as well. Well, the emerging market currencies have been under pressure because of that as well, as China cancels trade talks with US, and we are looking at a new fresh round of trade tariffs coming in effect from today. Well, it also is about the US Fed meeting, which will begin tomorrow. We will hear the final word from it on Wednesday. You also have central banks in Indonesia and Philippines meeting in this week, and there is an expected interest rate hike coming in from these emerging market currencies as well. So, whichever way you look at in the global markets, the only supporting grace today, of course, has been the decline in US dollar. But apart from that, the kind of cues that we're getting in sense of trade concerns, economy, etc., most of the emerging market currencies really do seem to be taking an impact from that. Joining us to talk more about the currency space and the global markets and, of course, the Indian markets as well is Gene Fang. He joins us from Moody's. Mr. Fang, hi. Thank you so much for joining us. First of all, what's your sense really in the international markets? Because we have seen the Japanese yen gain up in sense of a safe haven buying today. Most of the emerging market currencies are trading on the weaker side, and that includes Indian rupee as well.
Yeah, I think you've cited a lot of the drivers pretty well already. I think the market is reacting to news of the heightened trade tensions between the U.S. and China, the fact that the Chinese won't be engaging the U.S. in talks, and I think that's putting a lot of pressure on emerging market currencies and driving investors towards safe havens.
So, Jean, what's your sense, even with the kind of measures that the Indian government and the regulators have been taking and talking about, how much of an impact of that do you actually see coming in? Because we've seen the Indian rupee open yet again at 0.5% on the weaker side.
Well, we do think that the measures will have a moderate effect at most, and indeed, I think the kind of capital controls, as they are adjusted, will take some time for investors to consider, and so we do think that those recent measures will take some time to have effect. But we do think that the overall impact will be fairly modest, and that these measures in and of themselves probably won't reverse the decline that we're seeing in the rupee.
Exactly. Jean, in your sense, where exactly is the rupee headed, and what is the average level that we could probably see on the rupee?
Well, we're not in the business of forecasting exchange rates, so we don't have a view on that per se. But I think a lot of the pressure that we have seen on the rupee is coming from just the broader pullback away from emerging markets by investors. We do think that the other factors we're watching in India would include the rise in oil prices, the potential impact on inflation, and how the government might be responding with higher rates. But overall, the rupee itself probably has less of an impact on the fundamental strength of the government's rating. India's government has very little in foreign currency denominated debt, in contrast to Indonesia per se. So we're a little bit less focused on what the rupee itself might do from a fundamental ratings perspective.
Okay. Jean, just one quick question before I hand it back to Manisha. How much of the rupee depreciation would you attribute to global factors at this point, and how much of it would you attribute to, say, the domestic issues that India is facing when it comes to its macros?
I think a good deal of it is the global factors. I think that from a fundamental perspective, we still think India's economy is set to put out pretty strong growth numbers. Our forecast for next year is 7.5%. That hasn't really changed, and even though we do see some potential weakness coming from rising oil costs, we think there's some firepower that the Indian government can apply through fiscal measures to partially offset that. So we still think fundamentally India's economy is set to grow at a pretty robust pace for 2019.
Just one final question from me as well, Jean. As we were talking, we have a couple of central banks meeting in this week, and an interest rate hike perhaps is on the cards. When you look at India, do you see any policy changes coming in sooner here?
Well, we do think that there is a potential for another interest rate hike before the end of the year. As I said, I think there are some inflationary pressures building up. So we do think there's a chance that rates will go up one more time.
Okay, all right, Jean, we're going to leave it on that note. Thanks very much for joining in and talking to us. So that's a quick take coming in from Moody's on the rupee, and thanks Manisha for joining in as well. We'll take a break now, but when we return, we'll be discussing market technicals. Ashwini Gujral will be with us